Okay, in this video, we're going to go over an example of playing with the house's money. Basically, it's a lens that I use to think about certain types of investments, especially when you have an investment that moves a lot in a short time after you make your initial buy. And we're going to go over an example here just to illustrate kind of a set of trades that I actually did. And we'll talk through some of the implications and some of the benefits and drawbacks of using this playing with the house's money approach to investing. All right. So the ticker here is PLBY. This is the Playboy Group, and basically, so there's a company called a SPAC called the Mountain Crest Acquisition Corp, which purchased the Playboy brand. And earlier this year, you had a market cap when the stock was trading in the low teens. This company had a market cap of $500 million, which to me was pretty interesting. $500 million valuation for the entire Playboy brand, which admittedly had been ill-managed in the past, has been ill-managed for many, many years. But at the same time, this is sort of a brand with a long legacy, kind of a lot of brand equity, and it's also pretty well regarded internationally, which I hadn't really thought about before. So, this is sort of a bet on this company managing the brand properly on behalf of shareholders. So the initial valuation seemed kind of interesting. There's a call option on things going well, and so we would see, right? So this is worth, to me, sort of a small speculation. So here's what I did. I bought, back in February of 2021, I bought 200 shares of this thing at $12.44. So this represents, of my capital, an input of $2,488. That was my initial buy. And then what you can see is just a lot of luck happened, right? What happened is this stock went up a lot in a very brief period of time. It kind of got caught up in the meme stock rage. It was also seen, rightly or wrongly, as a potential play on NFTs. This was something where, obviously, Playboy has a long, long history of media and visual imagery that maybe could be made into NFTs. Who knows? And so this stock went up a lot and peaked at almost 60 within a matter of months. So again, I always have a rule that whenever I have a stock that goes up a ton in a short period of time, I make it a rule to peel off at least some, and that's what I did here. What I did is just a couple months later in April, I sold 20 shares at 43, and so that generated proceeds of $869.31, okay, netted against my initial capital investment. And then the stock kept going higher, and so I made another peel off of another 20 shares at 59.27. So what we have here are two different trades, and you can net these out, and then here's sort of an interesting thing to think about, right? If I put in $24.88 and then peel off $800 and $1,100, that leaves the remaining investment of $433 of my capital in, and of course I still have 160 shares, right? So 160 shares remaining at $23.27, and this is worth $3,723 of value, but my capital in is only $433 of that, right? All the rest is house money. So this is what I mean by having house money, and I don't have much of my initial capital remaining anymore. And on some level, this is actually very, very freeing. It's a good place to be because, of course, you don't know what's going to happen to a stock. And looking back, I obviously wished I'd sold it all at 59, but I didn't. And now the stock has actually gone down quite a bit since then. It's now in the mid-20s or low 20s. So, but because so little of my capital is at risk anymore, I actually kind of am dispassionate about it. I can kind of look at it again, maybe make a decision, hey, I might rebuy these 40 shares that I sold or make this a bigger position, or maybe I blow it all out because I'm not really very happy with what the company's done so far. It puts me in a place that makes me dispassionate, makes me kind of emotionally non-attached to the investment because it's really very little of it is my own capital. It's mostly gains from the house, right? It's house money. So that's where the gambling metaphor comes from. And this is really the value of looking at a stock like this with this kind of lens and then, trying to peel off enough capital such that there isn't that much of your investment remaining in the remaining value. And so it allows you to be emotionally distanced from your future decisions. And of course, this whole game is kind of about controlling your fear, controlling your emotions, and making the best decisions that you can, whatever the circumstances. So, playing with house money is one way to do it, and I just wanted to share it with you, just simple mechanics of one example here in this video. Okay? I hope you find it helpful, and thanks as always for watching.